Welcome to another episode of Millennial Investing Explained. Here's today's question. What is house hacking for someone who might not know?
House hacking is one of the most powerful tools, in my opinion, that can get you there. I buy a house or a duplex or a triplex or something like that with extra units or bedrooms, and I move in and rent out the other units. And if I do it correctly, the rent from the other units can cover my mortgage. So for my specific example, in 2014, I purchased a duplex in downtown Denver, and I fixed it up, moved in, rented out the other unit, and then rented out a bedroom in my unit. So all told, the rental income was $1,700. I think it was $550 plus $1,150. My mortgage was $1,550. So if you're following along, that's $150 or $1,700 in rent, $1,550 in mortgage, and I'm clearing about $150 a month. But I'm also operating the property, so I'm probably breaking about even on this structure. I put down $12,000, and I put in probably about, let's call it $8,000 to get it rent ready. If I go from paying $550 or $600 a month in rent to paying nothing in rent, that's an annual savings of $6,000 to $7,200 a year. That's an immense amount of cash flow to save in a year relative to my prior situation, right? I'm also benefiting from appreciation. I'm also paying down the mortgage. The tenants that live in Denver are at much higher risk than I am, because over the long term, I think we all agree that rents are likely to continue rising, not fall off a cliff. Many people are doing that same type of purchasing, but buying a home outright and not having other people rent it. They're just paying the mortgage. It is by definition a far more risky financial position to be in than the position that I was in. And then third, even if rents fall, I'm going to be having much more help paying down my mortgage. In the vast spectrum of possible scenarios going into that purchase, I had very high probability of increasing my cash flow, building wealth long term. That's why I'm a big fan of this house hacking concept, and I guess that's a basic introduction to that concept.
I agree that it's a very powerful strategy. It's actually, I house hacked my first property as well. Why do you think they come out of college and don't consider this idea and maybe either go rent or maybe buy a house or something like that?
I spend my time trying to convince as many people as possible to do this because I just think it has so many advantages and so few disadvantages. I don't know. I've kind of learned to accept that a lot of people are just not going to do it and are going to miss out on what I think is literally a multi-million-dollar difference maker over a 30-year relative to the other ways you can live your life. Just this one decision, even if you live there for just 1 or 2 years, could make potentially over $1 million over a 30-year period. I don't know why more people don't do it. If you're listening to this show, hopefully you're one of the people who is considering doing it and will rationally assess it. Now, I think that some of the things are, my deal was particularly effective in building wealth, and maybe yours was as well, but perhaps some of the characteristics that made our deal is particularly attractive would make house hacking unattractive to other people. For example, the neighborhood that I bought my deal in. But there's a whole spectrum here. So I could have done the exact same investment at, a higher price point in a more luxury area. I just would have not covered my mortgage completely and while I would have been better off than renting, it would have been a less dramatic wealth building difference, but still very powerful. So I think that maybe that spectrum is not in place. And, people are like, hey, I'm reluctant to buy a house hack if it's not a great investment, even if it's way better than the alternative of renting a luxury apartment downtown. So I think there's a number of reasons there.
A lack of education too, potentially. They don't teach us in college. I certainly didn't learn about it in college, and I definitely didn't learn about it in high school or anything like that. And what's awesome about the strategy too is you can do it more than once. We talked about doing it for your first house, but if you're coming out of college, you're 22, 23 years old, you can live there till you're maybe 24, do it again till you're 25, maybe do it again 26, 27. And now you've done it 3 times. You own 3 rental properties that could be generating a ton of cash flow for you, creating a mass amount of wealth. And you're not even 30 yet, and you still have the rest of your life to live. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.